part again. Okay. Okay, let's see if you really understand this. Okay. By the way, before I start, do you have any question? No? Okay. Let's do the first question. Please don't look at your PowerPoint, okay? I regret I should not post this proper PowerPoint. So for the question, because I want you to see my screen, okay? Don't look at the PowerPoint because you're gonna see the answer there. So company A purchased the land for 1 million during the year. Fair value at the end of the year was 1.25 million. What's my year-end journal entry?
The 1 million.
Well, you probably will reevaluate this, right? Because it's 25% increase in the value. What's your journal entry?
You'd have to debit the gain on the land.
Debit
land.
Credit
Credit gain.
Yeah. And then credit
Gain.
CI.
Okay. So debit land for 250,000. You credit OCI revaluation gain for 250,000, right? This is, it didn't go to the income statement, right? It goes to OCI, right? Okay. Clear? Is this clear?
Yeah.
Okay, good.
Yeah.
Okay, next. Company 2 has land that was purchased for 1 million in a prior year. Fair value was 500,000 at the beginning of the year, okay? And 400,000 at the end of the year. This is a sad story. The land value declines, okay? So in year 1, when you first acquired the land, you debit land for 1 million, you credit cash or AP for 1 million, right? Year 1 and year end for year 1, the fair value was what? 500,000. What's my journal entry?
Credit land 500,000.
Mm-hmm.
And it'll be like a loss.
Okay, you debit loss.
Debit loss for 500,000.
Okay, very good.
Yeah.
So you debit loss on land revaluation, 500,000, right? And you credit land for 500,000, right? So very good. And at the end of the year 2, the value further reduced, right? What's my journal entry at the year 2 end?
You debit another 100,000. Sorry, you credit a land 100,000.
Mm-hmm.
And then another loss, a debit loss for 100,000.
Very good, right? So you want to make it, so this entry reduced the value from 1 million to 500,000. This entry reduces further to 400, right? Okay, very good. So far, so good, right? So this is getting more challenging, okay? So just be ready. This one, company 3 has land that was purchased 1 million in prior year. Fair value was 600 at the beginning of the year and 1.1 million at the end of the year. Okay, what's the journal entry for year 1 end?
It'd be land. So you purchased land 1 million prior year.
Credit land
So,
400,000.
Mm-hmm. Debit what?
And a loss of 400,000.
Very good. Yeah, you credit land, debit loss, right? And then at the end of the year, 1.1 million, year 2, what's your journal entry for this one?
You debit land for 500,000.
Debit land for 500. Okay, and then?
And credit gain on land revaluation for 500.
Okay, interesting. Okay, anyone else?
I would say you debit land 500 and then you credit OCI 500.
Yeah.
Okay, 2 answers, right? Okay, anyone else?
Would you credit or gain on land revaluation for 400 and then OCI for the extra 100,000?
Okay, very good. Thank you. Okay, so this is what happened, right? So in the first year, okay, you recognize the loss, right, of 400,000, right? So you are in the pit, right? You are in the pit. First, you have to get out of it, right? You have to get out of it. So by recognizing a gain, okay, this gain is allowed on the income statement because you recognize a loss previously on the income statement, okay? So how much do you need to get out of it? Well, previously, the loss is 400,000. You just need a gain of 400,000 to get out of it, right? And now you are in the gain spectrum, right? So then the actual 100,000, that's the cumulative gain, right? That's the OCI, right? That's the OCI. So you first have to get out of this pit, okay? Does that make sense?
Yes.
Yeah.
So is it, can you say like any gain over the original cost is what would go into OCI? Like, can you look at it as like, that's the rule?
Yeah, very good. Thank you. See, that's something I was going to say. If you compare cumulative, right? Cumulative means there may be multiple years between, right? But you compare now versus the very beginning. So whatever the difference captures the cumulative, right? So the 2 years, if you compare the year-end value of the second year is 1.1, you compare to the very beginning value, that's 1 million. So for 2 years, the cumulative revaluation is a gain, and that gain is 100,000, right? Very good, thank you. So 2 ways, right? You can think this in 2 ways, 2 perspectives.
I have a question, please.
Yeah, go ahead. Yeah.
So let's say that the loss happened, like the year 1 loss happened in year 1, and then in year 10, they revalued the land. Are they allowed to also declare gain of 400,000 and loss and the OCI of 100? So like, how long can you carry that forward?
You just think about the cumulative, right? Cumulative. So you want to see at that point, what is your cumulative? Is that a cumulative gain or cumulative loss, right? If it's a cumulative loss, you should not have any OCI gain. That should be 0, right? Because if it's a cumulative loss. So the idea is, let's say in year 3, the value go down to let's say 900, right? Okay, I'm just gonna do this right now. Okay, let's say at the year end of year 3, okay, the value is 900,000. So what's my journal entry here? What's my journal entry for year 3 year end? Anyone can tell me what's my journal entry for the year 3? If the value of the year 3 is 900, what's my journal entry?
You would credit land 100.
Credit land for, so I go from 1.1 to 900, right?
Yeah, 200,000, sir.
Yeah, credit land for 200, right?
And
Okay,
then
what else?
you would debit the loss.
Debit loss.
200, loss on revaluation.
Loss on land revaluation of 200. Okay, so this is one answer. Anyone else?
Sorry, wouldn't the loss of land revaluation be 100,000?
Yeah. Okay.
And then
what about the other 100?
OCI, the OCI revaluation gain. Oh, wait.
Yeah, you're right. Yeah.
Yeah.
So remember, you have a gain here, right? You have a gain here. So before you recognize loss, you have to get rid of all the gain, right? Right? Because this is the same asset, right? You don't,
Yes,
you can't say
yes.
I have a gain, but I recognize this loss, right?
Yes.
The loss has to net off the previous gain, right? So the entry would be the OCI revaluation gain. So the balance is 100, and now you need additional credit, right? You need additional credit. So that will be your debit loss on land revaluation 100. Does this make sense?
Yes.
If you
It does.
compare cumulative loss or gain, so now it's 900, opening is 1 million. So cumulatively there is a loss, right? So that's this one. You debit the loss on land revaluation. So if it's a loss, you should not have gain. So whatever the previous OCI gain has to be reversed, right? Did that answer your question?
Sorry, is that because OCI always has to have a zero balance, like a zero balance from the original? Or sorry, no, am I making sense here? No. Sorry, never mind. Don't worry.
Yeah.
But I have the same question as Paul, which is if you have a balance on the OCI, should you first zero that balance before you put it on a gain or on a loss?
Yeah, if you take a look at this
Okay,
graph,
thank
right?
you.
Did you see this dashed curve? Right? So you start recognizing this loss after this curve is crossing this line, right? That means
resets
all the
itself.
cumulative gain is 0.
Okay.
Because this is a cumulative, right? At this point, the cumulative gain is 0. There's no gain. Yeah. So, but you just think of this way: you cannot have gain or loss at the same time, right? You cannot have gain and loss at the same time. So you either have to first get out of the loss and recognize gain, okay? Or you have to write off the gain and then get it into the loss, right? You have to always think about where I am at now. Am I at a gain location or a loss position? And you have to deal with that first, right? And then, you think about the loss of the gain. Does this make sense?
Yep.
Yes.
Still not clear. So if you have, can you have balances in both the gain or loss and in the OCI? And if there are balances for both, which one should you zero in? Which one should you achieve to have a zero balance first?
There's no OCI loss. There's only OCI gain. Yeah, there's only OCI gain. There's no OCI loss.
Because any loss is actually goes to the profit and loss,
mute
right?
out.
Yeah.
Just give me a second. I need a mute. Somebody, how can I mute? Just give me 1 second. Is that a mute? Okay, go ahead, Arlene. Sorry.
So if the reduction, if it is a real reduction in the value, then it has to go through the profit and loss statement via a loss. A gain, so you're right. OCI, you only record a gain.
Yeah.
Okay, thank you for clarifying.
Yeah. So before you recognize the loss, you first want to see is there a gain, right? Right. So it's kind of like you do business, right? The first year you make $2,000, right? And then the next year you realize, oh, I guess what? I lose the 5,000. And then you just recognize you lose 5,000. No, you didn't lose 5,000. You lose 3,000, right? Don't forget you make 2,000, right? So the first year you make 2,000. The second year loss 5,000. The net effect is 3,000 loss, right? It's not 5,000 loss. You can't just recognize the 5,000 loss because you have to first consider whatever the previous gain, right?
Right.
Okay, let's do one more question. If you still feel a little bit uncomfortable, let's do more questions, okay? Let's see if it makes sense, if you do more, okay, let's take a look at this question. Company 4 has land that was purchased for 1 million, fair value at the beginning of year 2, 1.25, year 3, 800. What's my general entry for year 1?
Would it be land 250 for debit and then credit OCI for 250?
Yeah, okay. I trust that you give the right answer. There was some background noise. So you debit land 250, you credit OCI revaluation gain, right? What about the year 2 end? Now it's 800.
Would you debit OCI gain again for 250 and debit is it loss of
I would
land?
first do credit on the cost account, right?
Credit land for 450?
Yes, do that first, right? Always do that first. So you credit land for 450, yeah. And you
debit the OCI and loss of land. OCI would be 250 and loss on land would be 200.
Very good. That's awesome. You got it. So, so you need a total debit of 450. But before you recognize the entire loss as 450, you have to know that you already have a gain 250, right? You have to debit that gain. So your real loss is only 200, right? So it's like, you know, you think you have 5,000 loss, but you forget the first year you also have $2,000 gain. Your real loss is actually only 3,000, right? Not 5,000. Cumulative. Okay, are we okay with this?
Yep.
I know this. I know we are not able to do the investment property stuff. It's going to take a long time. But I'm not rush through this. I want to make sure you understand this. This is important. Yeah. Okay. So this is company 4. Do we have a company 5? You can go home, make company 5, company 6, right? Just play around the number, right? So let's take a look at this question. Alpha company has a piece of equipment with original cost 1 million. Carrying value was 700. For that year, they recognized 100,000 depreciation. So at the year end, the cumulative depreciation will be $100,000 higher. The carrying value would be 600,000. The equipment fair value at the end of the year was 900,000. This is the first year the company has revalued this equipment. This is important. First year, no history, right? No history. Record the journal entry using elimination method. Okay, so tell me what's the journal entry using elimination method?
It would be a debit of 700,000.
No.
Wait, net any accumulated depreciation was some. Oh, never mind.
Yeah, that's the carrying amount. Yeah.
Do you credit the accumulated depreciation for 100,000?
For 100,000? No. Good try. No.
I would debit. Oh, go ahead.
Sorry, I was gonna say when you credit the equipment for 100,000.
You credit equipment for 100,000, right? That is right, because the equipment has original cost of 1 million, right? And the fair value is 900. The difference is 100,000. You're gonna credit, right? The decrease, credit equipment for 100. Yeah, that's right. Oops. Okay, so what do you debit?
Accumulated depreciation.
Yeah, okay. Because
but I don't know how
the
much.
elimination method, you need to get rid of that, right? Yeah. So for how much? You just know the balance, right? At the revaluation date. What's the balance of the account, right? You just debit for that amount.
400,000 this time?
Yeah, thank you, 400,000. See? So the carrying amount is 700 before at the beginning of the year. That tells us at the beginning of the year, that account balance is 300 because 1 million minus 300 is 700. And then you have to add 100 for the depreciation during the year. So the ending balance is 300 plus 100, 400, right? To get rid of it, you debit this account for 400,000, and you credit the equipment for 100, and you need to credit OCI revaluation gain for 300. Does this make sense?
Sorry, could you explain that again?
Okay. So at the beginning of the year, the carrying value was 700, right? And you know the cost is 1 million. These two numbers tells me that cumulative depreciation at the beginning of the year is 300.
Yeah.
Okay. And during the year, the company recorded a depreciation of 100. So this
Okay.
also increased the 300 to 400, right?
Yeah.
At the year end, right?
Yeah.
So at the year end, the cumulative depreciation account balance is 400, right?
Yeah, that makes sense now.
That's why I debit, because I need to eliminate this account, right?
Yeah.
And you know why we credit equipment? So I just need another credit for 300, which is
Yeah.
OCI revaluation gain. Okay.
Mhm.
Any other questions? Okay, now try to do it your own. Try to do it the proportional method. I want to see if you get it. The proportional method. I give you 1 minute to do that on your own. I give you 1 minute, okay, and then I will tell you the answer. Did you get it? Did you get it? Okay, let's take a look at this. Okay, so before the revaluation, the cost is 1 million. Cumulative depreciation is 400. Your carrying amount is 600, right? That's your carrying value at the year end. But you want it to be 900, right? Because that's the fair value, right? Okay, so then I want to do a calculation. 900 divided by 600, so that's 1.5, okay? 1.5. So that's my factor. So if I apply this to the cost, my cost should be 1 million times 1.5. If I, for my cumulative depreciation, that's my 1.5, proportional, right? Proportional. So my adjustment here is, so this 1 million, 1.5 million, I need a debit 500,000. So I debit equipment for 500,000. And I credit cumulative depreciation for 200. This is 400. This is 600. The difference is 200. Okay. And now I need a credit OCI revaluation of 300. See, credit OCI revaluation 300, credit OCI revaluation 300 is the same. Does this make sense?
Yes, it does.
Mm-hmm. Awesome. So let's take a look at the cost, right? After evaluation, your cost balance is 1.5 million. Your cumulative depreciation balance is 600. The difference is 1.5 minus 600 is 900. And that's the number you want, right? That's the number you want. Do we have any other questions? No question? Okay, so I'm going to just give me 1 second. Stop.